We've seen some other Trump trades. I don't know if oil and gas is necessarily a Trump trade, but the president is certainly pro-fossil fuels. Again, drill, baby, drill being something he even said, the night of the election, or I should say the night after the election, the morning after. What's your outlook when it comes to oil and gas stocks? Are there certain ones that you see as primary beneficiaries, second beneficiaries, or not benefiting at all?
Yeah, sure. So we come at it from the oilfield service angle, but I mean, one of the things that's clear is over the last 4 or 5 years, the domestic E&P companies have been really sticking to this extreme capital discipline theme, right? The Wall Street has drilled into their heads, pardon the pun. They need to not worry about production growth, generate free cash, and return a lot of capital. And that's not because of Biden's policies or changes in policy. That's because of just good financial decision making and what sort of the investors are demanding from the companies. So from that perspective, while there could be small changes at the margin, we don't expect to see a material increase in U.S. land drilling activity in the near term. Now, offshore, and I think your prior guest talked about nuclear and permitting, there's probably a little bit easier path to permitting some of these projects, even on the land side, permitting some of the pipelines. But on the just upstream spending in the North American land market, it's unlikely to change much.
So one thing I think that a lot of investors are trying to figure out is the oil price action. Oil's been pretty volatile this year. Some of it, you're laughing. It sounds like you're saying volatile is just putting it lightly. We've seen some big upside moves on Mideast tensions. Then we've seen the prices come down on not enough demand from China and things like that. Today, obviously, we're seeing some stimulus. How do you see these companies reacting to the volatile price of oil and the fact that there's just a lot of downward pressure on it?
Yeah, I think over the last couple of years, one of the things that has really stood out is the discipline that OPEC has exercised, right? They've continually pulled back production. As recently as last week, they talked about keeping these voluntary production cuts in place. And I think there's this sentiment around the world, honestly, that OPEC Plus is gonna work to keep prices within a reasonable range. One of the things to keep in mind, and I'm certainly not an expert on Middle East politics, but Saudi has this Vision 2030 out there where they clearly need oil prices to be healthy to really service the in-country demands to sort of evolve the economy. So we're pretty confident that you're going to see prices just sort of hover in this 70 to 80 range, and we've hung there even despite a lot of the demand concerns and challenges over the last couple of months.
All right, so I just want to be clear. You don't see drilling increasing dramatically next year, but long term, it sounds like under the president's agenda, we are going to see drilling increase. Doesn't that just increase the supply and make prices go down? I mean, long term.
Yeah, it's a really interesting paradox, right? Because the perception trade right away is Trump good for oil, energy stocks go up, right? And the reality is, to the extent he is successful, whether it's increased production out of the Middle East because of maybe better relations there than the current administration, or offshore production grows a bit. To the extent oil prices slide, and I've been doing this for almost 30 years, it's not good for my stocks when oil prices go down, right? So there's a little bit of a paradox there. We would expect that, I mean, all else being equal, that there's probably a bit of a downward trend on crude just because of some of the policies, but we don't think it's major.
Don't think it's major. Okay, Stephen, we're almost out of time. Just very quickly, I'm looking at your coverage universe. Give us your top pick in oil field services.
The one that jumps out is Baker Hughes, BKR. I mean, they were impacted by the Biden LNG pause. Mm-hmm. That's almost clearly going to be lifted. They're the world's largest liquefaction provider. They're dominant in that business. And then they have a global upstream oil service operation, which should benefit as well. So BKR would be our favorite.